Nick, good morning. How are you? It's the Money Clinic. It's Thursday. How have you been over the last 7 days?
Yeah, all good here, Conor. I mean, the big news is that I'm fully vaccinated, so I can re-enter the world of the living. Got my second vaccine on Monday, so things are picking up around Galway. You see a little bit more activity. Obviously, the pubs are open, and we've seen that there's been this massive increase in pints being consumed around the country. But there are other things as well, and positive signs of things moving ahead.
So you've been out in Galway then. Have you actually been spending any of that money that you have in vast supply?
No.
No, yeah. No, I thought that. Just in relation, we talked about 4 weeks ago. I think the second quarter's earnings are out. Is it at the end of the month? And
they start in the beginning of July. So I think you tend to see the first set of earnings, which is typically the banks, around the 10th of the month.
Aye, and one of the things I wanted to ask you about on this Money Clinic was I see on the front of the Financial Times this morning where headline news, the American economy, which the world seems to look to use as some kind of an indicator if things are back to normal. But the US economy is going great guns. It's bouncing back strongly from the pandemic, and there are concerns. Obviously, this inflationary concern is now everybody's talking about it every day. But the Fed have come out to say, look, because things are coming back so strongly, we are going to raise interest rates. The base rate in the US at the moment is 0.25%. But they've come out in the last 24 hours to say, well, look, we are going to raise interest rates in 2023, which is 12 months earlier than they had predicted. So I'm trying to figure out all of this, and I'm wondering, who really cares? What's the big deal? It's 2021 now. The Fed are talking about raising interest rates in 2 years' time, say, right? So why is that important, and what impact does something like that make on the markets, on the financial markets? What's your view on that?
Well, it goes back to the way that things have always been looked at traditionally. And so the Fed have a meeting once a month where all of the Fed committee members get together to look at what they're looking for from monetary policy going forward. So they have what they call dots. Okay, so all of the Fed members will place their dots in terms of where they think interest rate increases are going to be needed in the future. So I think we've spoken in the past about financial markets always being very forward looking. So it's not really about what's happening right now. There are definite factors that affect on a daily basis if they're significant factors, but it's always about looking forward. So what are the earnings going to be? What are the processes, and how is the economy going to look going forward? So that's why these dots become quite important. But you're right, how important are they now in 2021? And it really is just that forecasting technique. And it can change. I mean, even Jerome Powell, who's the chair of the Fed, yesterday, he said, take this piece of data with a pinch of salt. So he's as much as he's saying this is going to happen, he's immediately downplaying it. And what's the point behind that? Is it all because everything is focused on this economic recovery? We've spoken in the past about inflation being transitory, and I think we've both agreed that. And you've spoken to some other people who agree with those sort of things. But I think some of the data that's coming out that is a bit of a worry. There was some PPI data out this week that came out at the year-on-year increase was bigger than has ever been seen in the past. So there is this question forming in everybody's mind. Whilst we expect inflation, yes, it's going to be transitory. How good are the Fed and the central banks going to be at handling this growth that is faster than has ever been seen in the past?
So whenever we hear economists talking about, pricing in an interest rate into sort of ideas of how things might play out, that's sort of what they're talking about then. It's more, if we can, if I'm running a portfolio of whatever, and I know that, the Fed are expected to increase interest rates in 18 months' time, then I will price in maybe I'm going to exit some stuff, maybe I'm going to buy. So that's all part of the financial market. So that's why it's important.
Yeah. I mean, there's all of that, and obviously, currency gets affected by it as well. Yesterday, you will have seen gold suffered a fairly big decline on the back of the news coming out, because the US dollar increased in value as well. Because there is this perception that further down the line, people will, if there are going to be rate increases in the US, that makes the dollar more attractive from a funding perspective. Okay, but it is. Go on.
You wanted to talk about so that's good. I understand that now. So that's fine. You wanted to talk to me about the housing market this morning. Then obviously the housing markets across the world. My brother sells houses in Sydney. It's booming. New Zealand, Canada, US, Germany, everywhere. Okay, so one of the really fascinating things that has happened in the last 15 months with the worst recession in 300 years is that the housing market is kind of booming everywhere, right? So you wanted to ask me some questions about that.
Yeah, well, there was some data out this week about the Irish market in particular. So house prices growing at their fastest level in 2 years. Prices in Dublin up 3.5%, outside of Dublin up 5.4%. The forecast of 5% for the year coming up as well. So there's a few questions. Why are they increasing? Who is buying? Is it local people? Is it Irish people who are buying, or are they struggling to get onto the property ladder, which is what I perceive?
Right. Okay. So look, I've got some thoughts on this. I've obviously been working in real estate for 20 odd years. I've been following the property market on the island for quite some time. So whenever you talk about the housing market in Ireland, you're talking about the Republic of Ireland, but actually the same sort of thing has happened in Northern Ireland as has happened in the South. I think it was interesting because Gabriel Makhlouf, who is the governor of the Irish Central Bank, came out yesterday on a report in Virgin Media News with Paul Colgan to say, the housing market's actually very complex. And I know he's an economist, Mr. Makhlouf, but he's certainly no housing expert. Because actually, and this is a really interesting topic because it's been covered a lot in the media in the south of Ireland, but it's not that complicated. Yes, there's some dynamics going on around, the levels. There's no doubt that the quantitative easing measures, the expansive fiscal policies across the world where banks are being supported by government and there's more mortgages available. Certainly that if you make more money available to the marketplace, then people are going to be able to get their hands on mortgages and they're going to be able to buy property. But the underpinning issue in the Irish economy right now, the big issue in the Irish economy right now is a housing crisis. And the problem has not been addressed by this administration in Dublin and previous administrations. They haven't went about trying to solve this. They're not even letting on that they're trying to solve this housing crisis. They've been kind of bounced into it now, Nick, in the last, I know you're not a political person, but anyone who's been following politics, I've seen in the last 3 to 4 months, the pressure's on the current administration in Dublin to do something about this. The solution is simple. You have to build more houses on the island of Ireland. So we have to increase supply. What is Irish people good at? We're great builders. We've built most cities. You go to any big city in the world, you go to New York, you go all around the world, Irish companies are there in construction. We know how to build houses, but it's a political solution that's required in Ireland around this housing crisis. And I think over the next 6 to 12 months, if this administration doesn't do something very quickly about this, then there's going to be an election probably, and there's going to be a changing of the guard. The good news about all of this is that with the current, MMT, the Bidenomics, the European Union is moving alongside the US. They're saying that money is available. The Irish government went to the bond market in the last 2 weeks and raised another £1 billion. Economists like David McWilliams have been saying for donkeys, go and raise 50 billion quid in the bond market and set a housing target, and over the next 10 years, build 50,000 houses. So it's a supply issue. It's causing this increase in pricing. So we need more product. And certainly, if you look at the Irish banking sector, I mean, the only loans that Irish banks are doing right now are mortgages. These Irish banks, Bank of Ireland, AIB, these banks, all they're doing is mortgage loans. There's no risk in that. It's a 25-year product. And that's what they are doing. They're not lending to businesses, but they are actually providing mortgages. So hopefully some of that makes some sense.